Hey, good morning again. Bob, Trade Genius, 11th of November. Now I'm going to show you the oil chart. It's a kind of a similar bifurcation here, short term and long term. So here's the weekly oil chart. And as you can see, it's been an upward trend since the beginning of 2017. In fact, you could say since the beginning of 2016. And this coincides with the whole run up in the stock market too, if you notice that. And oil is probably one of the most manipulated markets out there. There's a lot of games they can play to hold oil off the markets, and use contango, and shipping and storage cost less than the rolling of the futures, yada yada yada. But we're breaking down here. Some people say this is a kind of head and shoulders on an incline. We broke to the channel here. Now there's a potential for this thing to kick back up to maybe 65, but I'm going to show you a monthly chart here to show you why this is probably going to go back and test the 16 lows. And as the dollar's moving higher, stock market and oil, everything is going to come back to here. The whole reflation trade is over, and it's going to be really interesting what the Fed's going to do when they find themselves in a situation where they're looking over the abyss. But here's the monthly. Okay, so here was the 2008, the blow off we had here with all the hot money. Then we came down, and in 2014 we went ahead and we hit the top of the linear regression channel. Okay, and we broke all the way down, and at 2016 we broke the bottom of this channel, rode right back up to the top of the channel, and we broke down again. Now, I'm not saying we're going to get to $10, but you have to respect the channel. And look where oil was in 1999. Okay, it was at $11. All right, we're producing more oil than ever. We're more efficient than ever. And my view is that China and India are going to nuclearize, and they're going to take themselves right out of the oil markets. And so I think that people always talk about this peak oil, $100 oil, whatever. They're wrong. And so oil is going to really, really fall. And so we may have short-term gain, but long-term pain. Now I'm going to show you something else that'll be pretty interesting to you too. Is here's the ES. And here's the ratio between the ES and oil. And so this is a 200-day or 200 days, 200-month moving average. It's down here. The ratio is about 26. We're double that. All right. And if oil is falling, and we're way over the way over our long-term average, and this is the price where most volume was ever transacted on oil, going back to 1998. And so oil is gonna, this is the ratio, by the way. So 15 times, you take the price of oil, multiply 15 times, you get the price of the S&P. And so you have oil at 60, right? At 15 is 900. All right, if you double it, it's 1200. And we're sitting at 2700. So the stock market is extremely overvalued as well. So everything's going to be coming down in price, and it's not surprising because incomes have not moved up. So this whole move was an asset inflation move versus basically generation of credit that had to go into assets versus generation of currency that would have went into income. And we're going to see this reverse. That's why you see now with the monetary policy tightening, fiscal policy is loosening. They're going to try to put more cash, in the hands of people. And I wouldn't be surprised if there's going to be a crisis of the central bankers, because, all they can produce is credit. And it's not going to take one of these populists too long to say, you know what, why are we doing this? We need to put the cash directly into people's hands so that they can pay for these things, and we can also pay our debt down. So That's coming in the near future. I don't know what the Federal Reserve is thinking. They're all of them tightening, and they're basically on suicide watch. You know, we already have a populist president here in the United States. You know, in Europe, you're getting the rise of populism all over Europe. And look, the Chinese central bank does what the Chinese government wants, and the same with Japan. So I wouldn't be surprised if you start seeing these bankers start to panic, especially if they cause a extreme economic recession. And remember, they did this stupidity in 1938. They made the stock market fall by half. So it's not out of the realm of their expertise to destroy asset prices. Anyway, thought you would enjoy this. Enjoy your day, and I'll catch you later. Bye-bye.